Oh, yeah. Y'all ready for this? The Bulls are back in town. Boom! Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet. Today we are going to be discussing, why is Bitcoin pumping? Why? There's a few reasons according to Cointelegraph. I have a few thoughts of my own and I'd like to hear your thoughts in the live chat as well as the comment section down below. We also have Bitcoin miners with low power costs and high sustainable energy mix will survive, says JP Morgan. We'll talk a little bit about that, even though we covered it shortly in yesterday's blocks episode. We're also going to be taking a look at Australian data center startup Archon expanding into the US with $26 million in fresh funding. And Bitcoin miner CleanSpark to buy two Georgia facilities for $9.3 million. AFOX is giving us our first RTX 4090 with a blower fan. Yes, this means if you are looking, if you're looking to build those proof of useful work rigs, these blower cards, are looking real nice for that, because we're getting that nice compact two width kind of size. It'll fit in the server nice. We'll take a look at those. We have a new release from BZ Miner and a new release from Rigel Miner, and that's going to cover it, of course, at the end of the show. Save all of your super chats for that if you have one that you want tied to a question, and I will get those answered for you. Super chats are always appreciated, never required, that sort of thing. And then, of course, tagging at Son of a Tech will highlight the message orange. I want to thank everybody that's here today. I'm going on vacation tomorrow, so I'm super excited for that. But let's get into the show right after a word from today's sponsor. All right, welcome back. So let's hop into the first topic of the day. Why is Bitcoin price up today? This is an opinion piece clearly from Kyle White over at Cointelegraph. It says Bitcoin price hits a year-to-date high as investors' excitement over BlackRock and Fidelity investments applying for spot Bitcoin ETFs fuels dreams of a new bull market. Now, of course, if we are going off the traditional halving cycle for Bitcoin, we aren't expecting the bull run until after this halving, which happens in pretty much 2024. Let's go ahead and get that chart up real quick. Countdown. I believe, let's see where it's at today, at least according to NiceHash, we're looking at April of 2024. And of course, the peaks of the bull run happen about 6 months after that. I discussed this in more detail in my crypto mining e-course, which you can purchase over at sonofatech.com and help support me. It's only $19.99. Shameless self-promotion. So I just want to make it clear that right now, if you are expecting a bull run, it could happen, but it would be outside of the normal cycle for Bitcoin. But a normal cycle hasn't necessarily been established. We've also talked about other factors that are going to influence what is the macro cycle, or referred to as the macro cycle, when Bitcoin breaks out of the halving cycle. In this particular case, what we are looking for is the fees to start matching the block reward. A miner gets paid out in fees, and of course, in the block reward. The block reward is the Coinbase or new coins coming into the network, and the fees are basically payments that people who are transacting are paying on the network. Some things that have thrown off these calculations are ordinals, for example, which are driving the fees up on the Bitcoin network. As those fees get closer and closer to the actual block reward, I would presume we are getting closer and closer to breaking out of the traditional halving cycle that we've seen over the past 12 years and start to see more of a macro cycle and a steadying out of the Bitcoin price. However, we are far, far, far from essentially the top or the leveled out price of Bitcoin, at least as I would see it. Now, Bitcoin price is up today, reaching a 2023 high of $31,431. Actually, today, right now, as of recording, it's at $30,438. The fresh Bitcoin price year-to-date high comes amid recent growing institutional interest in Bitcoin from companies like BlackRock and Fidelity Investments, both of which filed for a spot Bitcoin ETF within the past 2 weeks. The institutional interest seems to have negated the negative news of the SEC cracking down on Binance and Coinbase, and bullish traders continue to overpower Bitcoin shorts. Now, throw on that tinfoil hat, and are these institutions working with the SEC to drive the price down to have a nice entry point? The other thing that we saw was that huge spike to 138,000 on Binance.us. So clearly US institutions were making these investments into Bitcoin, and it drove that price up because of low liquidity, which was pretty insane. Obviously, it came back down and settled back around the 30,000. But if you did have buy orders, at $100,000, for example, on Binance.us, well, congratulations. That's pretty amazing. Now, let's get into more of this. Bitcoin price started to rally after BlackRock filed for a spot Bitcoin ETF in the United States on June 15th. While BlackRock is not the first to apply with the SEC for a Bitcoin ETF, they are the largest of all current applicants. To date, the SEC has refused to approve of spot Bitcoin ETF, despite numerous applicants including Cathie Wood's ARK and 21 Shares, which has filed for approval 3 times. Another company that was denied a Bitcoin ETF is Grayscale. After the rejection, the company took the SEC to the appeals court to argue for the soundness of Bitcoin futures. BlackRock is the world's largest asset manager with over $8.5 trillion in assets under management. The firm will also utilize Coinbase to custody the Bitcoin in the trust, according to the filing with the SEC. The application has also provided a boost to the Grayscale ETF, and the discount is approaching 2023 highs under 35%. Another financial services giant, the Deutsche Bank, applied for a digital asset custody license in Germany, in addition to Valkyrie applying for a Bitcoin spot ETF and a Bitcoin miner ETF. Liquidations could be sending Bitcoin prices higher as well. In early June of 2023, short sellers were liquidated at a lower range than longs. The BlackRock ETF filing announcement on June 15th has shifted fortunes away from short sellers, with over 220 million in shorts liquidated since that date. In the past 24 hours alone, over 31 million Bitcoin shorts have been liquidated. I think I need water, not soda water, to clear my throat out. Despite the short seller losing streak, it seems that this investor group is doubling down. On June 23rd, 53% of options were skewed short, which could potentially create an opportunity for a short squeeze and a greater Bitcoin price upside. The cooling US dollar index could be good for Bitcoin price as well. Another positive sign for Bitcoin is the cooling US dollar index. Historically, when the DXY index retracts, sentiment for risk asset like Bitcoin increases. Since interest rates were paused by the Federal Reserve last week, some market participants think that the US economy may grow and that the dollar could continue to cool. If this happens, Bitcoin could continue to rally alongside equities markets. The better the macro climate, the better for Bitcoin price. Typically, there is a close correlation between Bitcoin and equity indices like the S&P 500. After interest rates increases were paused by the Federal Reserve on June 14th, equity saw a large bounce while Bitcoin price retracted. Now, it seems like the current Bitcoin rally is allowing the Bitcoin price to catch up. Some market participants think that the U.S. economy may grow and that the dollar could continue to cool. If this happens, Bitcoin could continue to rally alongside equities markets. While Bitcoin price is showing some bullish momentum in the short term, after the BlackRock news and cooling dollar, the Bitcoin Fear and Greed Index has reached a 3-month high. And that is actually pretty incredible because right now what we're seeing is a rally that is kind of out of the norm for a traditional halving cycle, I would say. But in addition to that, is also very promising coming right ahead of this halving that's going to be popping off in April. I mean, we are less than a year away from the next bull run cycle if this plays out like it has for the past 12 years. So, I mean, me personally, going to be getting into trying to stack those Bitcoin miners as quickly as possible, that sort of thing. Get ready, get in a good position to be able to mine. And with the electricity costs on the state side coming down even more as a miner, this is becoming extremely enticing. That being said, there is a ton of competition within Bitcoin mining, and it's important to realize that. According to JP Morgan, only Bitcoin miners with low power costs and high sustainable energy mix will survive. Electricity costs played a vital role in the past year's bear market as miners struggled to stay in business, the report said. Bitcoin miners with low electricity costs and high sustainable energy mix are the only ones likely to survive in a progressively more competitive environment, JP Morgan said in a research report Thursday. The main cost in mining is electricity, which affects the overall cost of Bitcoin production, the report said, adding that miners have been looking for cheaper and sustainable energy sources to protect their profitability. Electricity prices have been falling, especially in the U.S., where most Bitcoin mining firms are based, the bank said, noting that the U.S. is the largest Bitcoin hash rate contributor. I think right now something like 4 petahashes in the US for reference. And the next closest right now is Russia, which has hit 1 petahash. But Russia is catching up very, very quickly, especially post or in the current landscape of the macro socioeconomic policies and blah, blah, blah. And yeah, it is what it is, right? It is catching up very, very quickly. We see a reversal going on in China. We see reversals going on in Brazil right now, too, on a lot of their mining policies. So everybody's kind of starting to come back to Bitcoin, and they're coming back kind of on cue, which is really interesting, getting ready to start stacking up. I wouldn't be surprised if we started seeing the price of ASIC miners for Bitcoin in particular start to increase pretty steadily running up until April. And you may run out of time to actually purchase these miners. And if you want details on that, once again, I'll shamelessly self-promote the Ecourse, because I do cover some of this, specifically the amount of increase in pricing on some of these. I mean, even to the point to where last bull run, we saw S9s going up and tripling in price. Electricity prices have been falling, especially in the US. Like we covered, hash rate refers to the total combined computational power used to mine and process transactions on proof-of-work blockchains such as Bitcoin. Lower electricity costs should help contain the rise in Bitcoin production costs in the current phase of rising hash rate. Analyst led by Nicholas. Oh, look, all right. Anybody that can pronounce that is just awesome, I suppose. He wrote, the cost of power has played a vital role in the bear market of the past year as miners struggled to survive, the bank said. The average price of electricity for Bitcoin miners globally is about 5 cents per kilowatt hour. However, some large mining firms have been able to pay as little as 3 cents per kilowatt hour, the note said. Lower electricity costs help the large Bitcoin miners keep Bitcoin production costs low and maintain their profitability even in the current highly competitive environment where the hash rate has risen steeply, making new record highs, end quote, the note added. Vulnerable miners, including Core Scientific, Argo Blockchain, and Iris Energy, have struggled to survive due to a combination of falling Bitcoin prices, rising debt servicing costs, and rising electricity costs. Speaking of debt, a lot of these miners, the biggest mistake they made was taking out loans against their equipment during the bull run when the equipment BOM cost to manufacture is just not anywhere near what the miners were being listed for. And if you were going to, or if I was going to take out a loan to purchase miners or on my miners, the best time would be like during a bear market when the price is low and you can easily pay those off once those miners regain their value. That's where a lot of these miners failed. It wasn't even that you could, if you had the equipment, right, and you had a decent power cost, you should have been fine. The problem was really that they added on this debt that was just making things insurmountable at the end of the day. Miners with high electricity costs have been facing losses due to falling Bitcoin prices over the past year. But if you owned your equipment outright, once again, this is why I never recommend like taking out loans in the first place, etc. If these machines were owned outright, worst case, you can power them off and save that power cost and move out. The problem, of course, is if you have a purchase power agreement that's requiring you to utilize a certain amount of power and that price is fluctuating, which would be a terrible agreement in the first place. Typically, if you're in that type of situation, you're going to have some sort of lock on price and they're going to have some sort of lock on how much power you have to utilize. JP Morgan says that over time, the Bitcoin mining industry will consolidate and become more competitive because only miners with low production costs will be able to survive. Miners have also been trying to diversify their power mix with renewable sources in order to become more environmentally friendly, the report said. Of course, renewable resources on like an energy intensive process can be quite difficult. You know, a lot of people talk about for home miners trying to go solar, etc. The price really hasn't come down to make that viable in my humble opinion. A lot of the diversification of larger miners are, refurbishing things like old like hydro plants and so on. But that kind of capital really pushes a lot of people out. That being said, more capital is being dumped into the data center and basically Bitcoin mining scene, cryptocurrency mining scene, starting with Australian data center startup Archon, who expanded to the US with $26 million in fresh funding. CEO Joshua Payne said he expects the acquisition of a data center in Hannibal, Ohio to be the first of several over the next year. Archon Energy, a data center infrastructure provider based in Melbourne, Australia, is expanding to the US with the acquisition of a site in Hannibal, Ohio. The company, which operates data centers that host Bitcoin mining equipment, also raised $26 million in fresh capital from Santon Capital Partners, which it intends to use to fund an aggressive expansion into North America, according to an announcement shared with CoinDesk on Tuesday. That's on top of the $28 million it raised in November when it bought the Hydrocraft AS, a renewable energy-based data center in Norway. The acquisition is likely to be the first of several over the next year, CEO Joshua Payne said in the statement. The data center in Ohio is designed for a capacity of 100 megawatts and is expected to add up to 3.3 exahash per second to the firm's hash rate by the end of 2023. Archon said it hopes the facility will offer a predictable revenue stream by providing server hosting services to Bitcoin mining firms. Bitcoin mining firms felt the pain over the last year's crypto bear market as they were squeezed between falling valuations and high electricity costs, with some firms going bankrupt as a result. Further uncertainty lies ahead with Bitcoin's next halving, now less than a year away, which will reduce rewards for mining blocks and so challenge firms' profit margins further. Quote, raising capital in the current climate, particularly amidst a crypto downturn and increasing regulatory scrutiny, was indeed a challenge, end quote, Payne said. However, the uncertain market landscape also presents very well-priced buying opportunities for those that are able to navigate the storm and protect the downside. And I mean, that's it right there. It's right in front of your face. What are these companies doing? They're starting to prep for the next bull run. They're starting to get they realize that they can get dirt cheap prices on equipment, you know, down to like $12 per terahash, even cheaper if you go up on your minimum order quantity. And that's really getting you into the position of having a really large step up to anybody else that starts trying to accumulate equipment after the halving, at least in my humble opinion. And they're not the only one. Bitcoin miner CleanSpark is to buy 2 Georgia facilities for $9.3 million. The new facilities are expected to add just under 1 exahash to CleanSpark's hash rate. NASDAQ-listed Bitcoin mining firm CleanSpark has agreed to acquire 2 facilities in Dalton, Georgia for $9.3 million in cash. The facilities will host over 6,000 Bitmain Antminer S19 XPs and S19J Pro Plus S, and are expected to add just under 1 exahash per second. By the way, these are hydros, and these are not hydros. So I don't know why this is the picture, but I mean, it is what it is, right? Just to, in case anybody's getting confused, these rigs are not the ones that are shown in the picture. CleanSpark's aim to have 16 exahash of power by the end of 2023, which the acquisition of these facilities will ensure they have more than enough infrastructure to reach, said CEO Zach Bradford. Its previous big move was the purchase of 45,000 brand new new Bitmain Antminer S19 XPs for $144.9 million in April. Quote, we continue to make use of opportunities created by current market conditions to prepare for next year's Bitcoin halving, said CEO Gary A. Vecchiarelli. With the industry still reeling from the sharp fall in Bitcoin's valuation last year, combined with rising costs from high electricity prices, mining firms are looking toward Bitcoin's next halving, now less than a year away, which will reduce rewards for mining blocks and challenge their profit margins even more. Now, in the past, the profit margins haven't been challenged because the profit starts to significantly increase. And most of the miners that had, in my humble opinion, leveraged too much debt have been pushed out. So I think we're kind of back to baseline on traditional cycles, or the traditional halving cycle. And I think that we'll still see that play out at least one more time. Maybe 2 more times. It's really hard to tell. Also, we really don't know the direction of ordinals at this point. If ordinals end up being a bull run push like NFTs on Ethereum were, we could start to see some craziness begin to happen over the whole market. Because remember, a rising tide raises all ships, and ordinals are on Bitcoin. So if that starts to drive the value of Bitcoin and, of course, the profitability of mining up astronomically, then I think we'll see quite a bit of a different market this time around than what we would normally predict, right? If we went purely off of traditional halving cycle, we would expect Bitcoin 6 months to a year after the next halving in April to be somewhere around $210,000. But with all of these other variables getting thrown in, it should be quite interesting and unpredictable, I think, to say the least. It could go way above that, for example, right? And it's going to be interesting. That being said, let's go ahead and get into some hardware news. We have a new GeForce RTX 4090 with a blower cooler from AFOX. And this one's really interesting because you can see here, it is just a 2-slot card, 1 screw, 2 screw. This is going to be really, really good for server mining rigs for proof of useful work. And it says blower fans on the RTX 40 series are not a new thing. Many board partners have either officially or unofficially tried to introduce such solutions. Such coolers could have been considered a thing of the past, if not for the fact that they still find their place under very specific conditions, like GPU mining in a server case or proof of useful work, in my humble opinion. Graphics cards with blower fans combine the advantages of gaming RTX series and meet some criteria required for workstation GPU instances. The main difference is the price. The GeForce RTX cards are undeniably cheaper, but at the same time, full-fledged workstation GPUs have more memory and driver specific optimizations. However, there are many enthusiasts and researchers out there that do not require these benefits, and running multiple instances of RTX 4090 GPUs at the price of one RTX A6000 is a much better solution. Most 3D and video rendering, as well as locally stored generative AI models, which of course will be tied to proof of useful work, will run just as well on the RTX workstation models. The AFOX RTX 4090 graphics card is precisely what many of such people may be looking for. This is an AD102 based model with 24 gigabytes of memory, featuring one 16-pin power connector. Previously documented RTX 40 blower cards were limited to 450 watts, and there was no option to increase the power limit any further for a good reason. Blower fans are not as efficient as open air designs. That being said, of course, to be extremely clear here, if you have a server that's designed to push air and it's a really loud server grade fans pushing air through those blower coolers, it can be just as good as anything else, and optimized for a blower style. So it's a little misleading here, I think, at the end. Nevertheless, running multiple instances on one server should not be a problem. In fact, we're looking at 2-slot design with a 26.6 centimeter length, rarely seen with the 4090 models, and that is rarely. I haven't seen any that are 2-slot, and I like the plug on the back. That's going to be very, very nice, I think, for your server rigs. Basically, at the end of the day, your octo miner style cases as well. If you aren't going to go upgrade to the octo miner server or upgrade to some old rendering servers for proof of useful work, let me know what you guys think about it. I'm pretty excited about it. Next, we have the new BZ Miner version 15.3.0. In this one, there is a significant improvement to the ZIL stability. They improved overclock switching stability for ZIL. They improved overall stability for multi-mining, and they updated logging. There is a displaying GPU causing driver crash when main loop not responding. A lower default hung GPU threshold. They fixed the Raven display wrong hash rate for AMD cards. Increased the accuracy in HTTP GUI hash rate graph. They fixed the fixed Neoxa on miner pool. They fixed NVIDIA metrics crashing when driver is not installed correctly. And they fixed possible crash on exit. It does say, note that the Nexa development is a continued joint effort with LOL Miner, which we've been aware of. The driver 530 for NVIDIA and higher has a bug that reports the wrong clock frequencies, but overclock should still be applied correctly. And some people have been having issues with the latest version of Hive running BZ Miner. So if you are experiencing that, you need to go to version 06.219, kernel 5.1, which is still disappointing that we haven't seen an upgrade to kernel 6 and above on Hive OS to support Intel GPUs. I don't know where you guys are at with that, but like, it's been a while. I feel like there should be support. Of course, if you guys are looking for a mining OS that does support Intel GPUs, I have covered it on the channel. You can go to MMPOS. Then we had another release that we did cover yesterday, the Rigel Miner version 1.5.3. Nothing impressive here, really just looking at fixing some invalid share issues when mining to NiceHash for Nexa, because of course we had that announcement and that release of Nexa support on NiceHash. And then, of course, they improved some overclocking abilities and stability stuff with Zilica. That's about it. Let's go ahead and take a look at some statistics here, though, because there is some moving around on statistics for the Hive on board here. And moving on over, what you can see is kaspa is still number one at 16%, which is quite crazy. It's pretty nutty. We haven't seen anything like this where you have ASIC competition and FPGA competition, and GPU still maintaining a large share of basically mining a specific coin. So this is probably pretty bullish for kaspa in my humble opinion, just because people that are mining that for the most part are not going to be mining at a profit. I guess it is still profitable. So on the 4090, let's look at something like the 3070. That's the laptop. Here we go. I think, and I'll show you guys here in a second, but yeah, you're 4 cents a day could be, I guess it's close enough. All of these are close enough. I mean, you could make double that on what? On Dynex? Yeah, on Dynex with the 3070 right now. And Dynex is in 4th place, tied with Nexa. Nexa kind of going up in percentage makes a little bit of sense with them being added to NiceHash, I suppose. Ethereum Classic still holding strong too, in 2nd place at 12%. In addition to that, we still have a ton of RX 588 gigabytes being mined on, 24% for all the AMD models. For NVIDIA models right now, the highest is the RTX 3070 at 13%. So that's why I wanted to check the 3070 there. You got pretty much start to fall down below that. Those are the most popular cards. I would be a little nervous that the 3070 resale value to gamers is going to go down pretty significantly if it already hasn't. Primarily due to the fact that it only has 8 gigabytes of VRAM, and that's showing to have knocked the card down to a 1080p card in most current titles. So if you're just a GPU miner and you're not paying attention to, what the gamers are saying about the 3070, I mean, a while ago, Tech Deals, who is here on the YouTube, check him out. He does reviews for gaming of GPUs and so on. But when the card launched, he said this card's not going to be a good purchase because it's not going to last that long due to the amount of VRAM. Sure, it's okay for 1440p right now, but it's not going to be okay for 1440p in the future. And alas, with the most recent releases, he has been proven right in that particular case. And the move to 4K as well as 1440p is going to drive those cards' values down quite significantly. And there's going to be a ton of them on the market just due to the fact that there's so many of them still mining. I do wonder how, that will be affected when we move into the next bull run. If there is a rise in, some sort of GPU mineable coin crypto that makes these things once again worth something. My strategy, for example, would be getting rid of these 1660 supers that are at the top of the charts and these 3070s. Anything that's 8 gigabytes of VRAM or below, really 12 gigabytes of VRAM and below, I'm probably trying to get rid of, unless it's like an RTX 3060 12 gigabyte, which is a weird outlier in that particular case. Looking for 16 gigabytes of VRAM and above on GPUs and trying to get the farm to that particular state if I'm looking at strategies for GPU mining. And then also, I'll also at the same time taking into account the upgrade and parts that you're going to need for proof of useful work, if that ends up being the direction during this bull run that GPU mining takes. I mean, you can have an Octominer 12 GPU rig, and that's all cool until you get to the point to where it's like, oh, that's not going to function for me anymore because I need 128 gigabytes of RAM and 32 CPUs and all of this and a big pipe. Making those transitions is going to be a little difficult. And then you'll run less GPUs on those as well. So do you really want to be running, more 3070s, or do you want to have higher VRAM GPUs and beefier GPUs like 3090s or whatever ready to go, or these new blower style 4090s, for example? Just some thoughts surrounding the GPU mining in general. Speaking of that, though, let's go ahead and take a look at this. It does look like Pepe proof of work is showing most profit. Of course, be careful with that one, just because I think it's only on ZegX still, but that is what's showing on the 3090 at this point. And then coming in second is Novo, low liquidity issues as well. You can see these unknown volume targets as well. So Nexa is really kind of the go-to, it's looking like, with Radiant coming in second and Alephium coming in third. I would expect to see some sort of FPGA support for Alephium, Radiant, and even Nexa. So all three of these coins that are at the top, just to be completely frank with you guys, at some point in the bull run are not going to be available to GPUs, right? That's just the way it is. Next is going to be switching their algorithm to something that specifically supports ASICs with a plan to actually do that. I talked about that in the interview that I had. Radiant, we already have hints from the Osprey team that they're going to be releasing some sort of FPGA support for that. Probably be very profitable on the E300. Alephium, it's Blake 3. We already have Blake 3 support, albeit a little bit of a different version of Blake 3. But, you know, Blake 3 support over on Ironfish already for FPGAs. That bleeding over into Alephium is probably going to happen. Kaspa, clearly, Bitmain already has its ASICs ready to go. I mean, you can pretty much count out all of these, right? Low volume, trash coins, shit coins. Nexa, Radiant, Alephium, Kaspa, FPGA, ASIC crowd. It takes a while to get down to one that's not, and that's Dynex, for example, which it does have that possibility of GPU mineable. And then from there, kind of just going down. I did cover Skydoge in a short, if you guys want to cover this, but they have a not a really hefty pre-mine. Sounds like a lot. It's 210 billion total supply, but they have a 10 billion pre-mine. So keep that in mind. Also unknown volume, all that same BS. Going down from there, we have Ironfish, obviously already FPGA, Bitcoin Z, already ASIC, Xano. I guess we finally get to another one. There's just not a lot of like awe-inspiring GPU mineable projects at this point, other than Dynex that I can see. You could say maybe Conflux, right, which is a decent one. And then you probably have to scroll down pretty far for Ergo, which is actually not even profitable right now. Cortex, technically, but you're going to have some other issues with what cards are supported on Cortex. So GPU mining's just not looking great, unfortunately, but that's the way it goes. If we take a look at mining pool stats, we are seeing Bitcoin sit around 388 exahash a second with a recent uptick in difficulty. We've been steadily going up since May, so May, June, July, and May and June we've seen upticks. And then we're seeing obviously the summer months. So I think we're gonna start we saw some dips in the hash rates. But it's not resulting. There was supposed to be a 3% decrease in difficulty, I think, this week, but it's not showing here, at least on mining pool stats yet. I think that's the projected one, right? So then if we go through some of these other ones, take a look at Ergo. It's up 5% over the past 7 days. Hash rate sitting at 22.88 terahash a second. Kaspa, interestingly, had briefly hit 1.5 petahash a second. It's at 1.2 petahash a second right now. It's up 16% over the past week. Looking really, really strong. Of course, we're still waiting to see what happens with Bitmain. From my knowledge right now, it looks like we can guarantee 5,000 units that were sold to a third-party manufacturer at 8.3 terahash a second. That'll be something like 40 petahash. The timing of those, how they drop onto the network, and what that ends up translating into with relation to the actual emissions of Kaspa is going to be everything that we have to take into consideration before you could tell where this is going to be at, right? I mean, obviously the miners look really, really good. If you got a KSO right now, you got a KS1, KS2 from Ice River, you're looking at being able to crank out some decent hash rate, decent profits. How long that will last, though, is really up until the point to where Bitmain has the ability to drop these 5,000 units for testing onto the network, right? And then at that point, we'll have a 40x increase in difficulty, which would, for example, take the KS3 profitability down from like $3,000 to where it's at right now, right? Or something crazy, 3,300 a day, down to like 70 a day. We ran that math over on sonofatech.locals.com, but it's really up in the air. Lots going on as far as that's concerned. If we take a look at Flux, some of the big ones, it's up 10%, but sitting at 2.3 mega solutions a day. It wasn't showing on the profitability calculators there. Dynex kind of being interesting, I think, overall right now for GPU miners, up to 877 mega hash a second on the network. We did see a spike in difficulty, and it's up 7.74%. There's some weird stuff going on here, though. Obviously, like we've talked about with the miners in the past, it does appear like if you are a miner developer, mining software developer, there have been some tricks of the trade to basically double the hash rate, for example, like we've seen on the picking and choosing the type of work you're doing to get better hash rate, which ends up being more profitable, but it actually does less for the network. I'm wondering how that's going to get resolved in the future, but it's yet to be seen right now. And then ASIC miner profitability, KS3 is still showing at the top. KS2s are doing $795 a day, which is nutty. The Antminer L7 still solid, sitting right in that third place like it has been since forever. So a pretty easy, just cranking along through the bear market. Antminer L7s have been obviously pretty good as far as that's concerned. Scrolling down to the S19 Pro, it is starting to be profitable. At 10 cents a kilowatt hour, on Bitcoin, making 28 cents a day. And you can get the low power mode for these. Drop that hash rate down to about, I want to say it was like 80. It's like 80 to 90 terahash a second. And you cut that power almost in half, not quite, down to like 2,000. Been a while since I checked, but that's going to get you more profitable. So there's also a lot of people working on new hash boards from Epic to Xilinx, etc., and different firmwares for all of the Xilinx, like Brains or Hive OS or whatever. More overclock ability, more control over each individual ASIC chip on those Epics that are making some of these S19s very, very profitable. And that's outside of just the low power mode, right? So lots of options going on as far as that's concerned. Let's get into questions and answers. Remember, super chats are never required. I always appreciate it first to be answered because they're the easiest to read. I want to thank everybody for the super chats earlier. Patrick, thank you for the $10 super chat. Says enjoy the vacation. I plan on doing that. Thanks for the $10. Chadwick, good to see you here. Did renew the 15 months on Rocket Chat, so thank you, good sir. Read on Twitter that the ETF was approved. Maybe that did just happen here recently. Chad also donated $5 super chat, said enjoy the vacation. Thank you, good sir. And Vinny with the $19.99 super chat says enjoy the vacation. Thanks, everybody. I appreciate it. And I'll give you guys just a little bit to get your questions in. Oh, why is Bitcoin cash pumping? Yeah, that's an interesting one. Son of a rabid panda with the clever name there said, everybody's talking about solar power plus batteries. Have you studied the option of biogas by any chance? Not biogas, no. Not as easy and clean as solar, but can provide 24-hour power, I guess. Yeah, I haven't looked into any of that. I have looked at, well, I take that back. It's like repurposing like the gases that come off of sewers. I know some municipalities here in Texas have been talking about that. But I haven't done enough research. Hey, Mind Something. Thanks for rewatching. Make sure you guys go sub to Mind Something. Does good coverage. Chadwick says, that son of a tech, so sad for the GPUs. My CPUs are the only thing making money. Yeah, I mean, the GPU market got really depressing really quick, right? I mean, ETH left and GPU mining died. I mean, that's the reality of the situation. If we're being honest, I think it can recover though, if there's something that can really take over. But it doesn't look like most devs want to go that direction for whatever reason. When we are seeing these new coins, they're all going ASIC. They're all going the direction of ASIC. And I don't know how much of that is tied into greed or anything, right? I don't know. Someone text said, did you find a new lease for better power PPA? No, I'm still trying to get out of the lease. If I get out of the lease, I'll just throw it all down. But I did get, so the good news is my power rate did go down along with the power rate of everybody else because the fees reduced, but I don't know what's guaranteed and what's not. So I'm down to 11 cents a kilowatt hour, which means I'm profitable on all the S19s right now. So that ended up being a good purchase. At least making something. I say profitable, we don't cover the lease, right? But we're covering power and getting some after. We'll figure it out. Yeah, Mr. Green says fart gas. That's what I was thinking about. So I have heard about that because I've been in the talks in some of the San Antonio ones. Near Gonzalez. Well, I know who your power delivery is. Son of a Rabbit Panda says, that's Silent Tech, I was thinking of pig farms. I know. Well, there's pig farms, cow farms, all that, right? Billy says, that Son of a Tech, hey, great to see you. I'm dropping in here late, so please excuse me. I do have a question of what ASIC would you recommend going after the present moment? I mean, personally, I'm going after S19s, right? Jess says, do you foresee S19 selling cheaper when the Bitcoin halving happens? I think from here on out, we see the price go up of all ASICs. But the thing that's changing the game now, to be clear on like the ASIC game, especially Bitcoin miners, specifically Bitmains, is that we have all of these third-party control board manufacturers and firmware developers. So, you know, we're seeing S19 100 terahashes hit like 200 terahash overclocked and immersed, right? This is going to significantly change, I think, the at-home ASIC miner or like the shed garage ASIC miner game quite a bit. I think you'll see that price get driven up. I think what you'll really see, though, is a huge shortage in control boards. Because it's no longer going to be like, it'll basically be like this. You'll have an S19 that's running, what, like an S19 104 terahash. You could get a massive upgrade if you bought the Epic board, but you won't be able to find the Epic board anywhere. Well, and the Epic boards are extremely popular right now, too, because the Epic boards completely remove any developer fees. Yeti crap, which were the more... So, the S19 XPs are showing less reliable right now. S19Js and S19 Vanillas are the best. That's going to call it for me today. Thanks everybody for watching. Hit the like, comment, subscribe, and notification bells down below. I'll be live over on Twitch later tonight playing some Diablo maybe. But that's about it. I'll give you guys that link. And I think that will do it. I'm going to go on vacation, so I won't be around. Definitely going to stay off Twitter. And we'll go from there. Hit the like, comment, subscribe, and notification bell. I'll see you next time.